History has proven in the recent past that tariffs can cause problems in the economy and the markets as well. We have talked for the past month or so that we have been lightening up on our investments, which does not mean we went 100% to cash, but a more reasonable level of around 20% in cash and 80% invested. A big reason for this is I believe currently the markets are incorrectly ignoring what the potential tariffs will do in the short term. It was only about 6 years ago when we had tariffs, and that caused disruptions in the supply chains and rising manufacturing costs, along with declining profits for some corporations. Our trading partners did not simply give in to the demands we were asking. Looking at China in particular, in September 2019, an additional $113 billion of tariffs were imposed on top of roughly $50 billion of tariffs that were already in effect. Each time the tariffs were raised, there was a retaliation from China. This began to cause wild swings in the stock and bond markets. It is important as well for investors to understand when tariffs are imposed in 2018, the economy was doing well. That was because of recent tax cuts that reduced the corporate income tax from 35% all the way down to 21%, which was a 40% decline. Now, in 2025, there are no big tax cuts that the economy and businesses are benefiting from, which could hurt corporate profits in the short term. There is a potential tax relief bill that must go through Congress, but that would not be felt by anyone until the summer or maybe the late fall of this year. No one knows for certain how long it takes tariffs to benefit the economy because last time the world and trade fell apart as COVID changed everything. So for now, we'll just have to wait and see how long it will take before the United States sees a benefit to tariffs, which I believe long term they are a good thing. With some potential short-term headwinds from these trade conversations, well, I think it's important to not be overly aggressive with your portfolio and to make sure you're holding strong businesses with low valuations that do not rely heavily on overseas trade. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.